Welcome back to Investing Talk Podcast.
Today we're looking at Ondas Holdings.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, so this is a company that's really positioned itself at a fascinating intersection.
It really is.
Yeah.
You have autonomous defense systems on one side and then mission-critical industrial connectivity on the other.
And Ondas operates in both.
Yes, through two core segments. There's Ondas Autonomous Systems, or OAS, and then Ondas Networks.
Positioning is one thing, but, execution is another. And when we look at the financials, I mean, the execution seems to be on fire. This stock has returned, over 900% in the last 12 months?
An incredible run.
What kind of growth is fueling that kind of massive move?
Well, what's fascinating here is just the sheer velocity of the recent growth.
The acceleration.
Exactly. The company reported record third-quarter revenue of $10.1 million.
Which, on its own, is a good number, but the context is key.
Right. That's more than a six-fold increase year over year. And maybe more importantly, it was up 60% sequentially from the previous quarter.
And that right there, that signaled a true revenue inflection point.
It does.
That momentum has clearly changed the trajectory. Management is seeing the same numbers because they've sharply raised their future outlook.
Absolutely. They threw out the old guidance. The full year 2025 revenue guidance is now at least $36 million.
Up from, $25 million originally?
It's up from $25 million, yes. But the real story, the reason the market is so excited, is the 2026 target.
Which is?
A preliminary target of at least $110 million in revenue.
Okay, let's just unpack that. A jump from a trailing 12-month revenue of around $7 million to a forecast of $110 million just a couple years later is monumental.
It's a complete transformation. It takes them from a speculative small cap to something that looks a lot more like a mid-tier defense tech contractor.
So confidence like that must be built on something real. Structural advantages.
Exactly. And this gets us to the core of the bull case, the competitive moats they are building.
The moats, right. And it looks like there are two really powerful ones here.
Two, yes. The first is regulatory, and the second is based on industry standards.
Let's start with the regulatory one, with the OAS division.
Okay. So the OAS division's Optimus system secured the first U.S. FAA certification for autonomous operations without a human on site.
That sounds big. What does that actually mean?
It allows for automated beyond visual line-of-sight operations, BVLOS.
So why should you, as an investor, care about those four letters? BVLOS.
Because it fundamentally changes the entire unit economics of drone services.
How so?
Well, traditionally, you need a licensed pilot physically there, which costs hundreds of dollars an hour. BVLOS removes that human cost entirely.
So a drone can operate 247 over hundreds of miles of, say, a rail line or a border with almost zero direct labor costs.
Exactly. That regulatory approval isn't just a tech achievement, it's a permission slip to unlock massive new revenue streams.
Okay, that's a massive barrier to entry, a huge moat.
It is.
But they aren't stopping there. They're also locking down the industrial space with their network solutions.
Yes, through Ondas Networks. They're becoming standard setters, which is a very powerful place to be. Their platform is based on the .16 protocol.
And the key win there was with the railroads.
It was.
Yeah.
The Association of American Railroads selected .16 for its next-generation communications. By becoming the standard, they get deeply entrenched in that whole industry.
The switching costs must be astronomical.
You can't just rip it out. It's tied into safety, signaling, everything. It creates incredibly sticky long-term revenue.
So you have a regulatory moat in the sky and an industry standard on the ground. And on top of that, they're using M&A to accelerate things.
Very aggressively. The goal seems to be creating a complete system of systems.
And that Centrix acquisition is a perfect example.
A perfect example. It's a leader in counter-UAS technology, drone detection.
So they can combine their own autonomous drones with the ability to detect and neutralize other drones.
Exactly. It's the industry's first fully integrated detect-to-defeat solution.
And this integrated system of systems approach is what's winning these massive contracts we're hearing about.
It is, like that major government contract to deploy thousands of drones for an autonomous border protection system.
And the market is waiting for news on that, right?
Very closely. The expectation is for an initial purchase order in January 2026. That, plus other wins, is how they plan to get to that $110 million target.
So the strategy is in place. But this kind of aggressive growth requires serious capital.
It does.
Which raises the big question. Can they sustain this pace without massive dilution?
And that's where the story pivots back to financial strength. Fortunately, they did a number of equity offerings in 2025.
And that gave them a pretty big war chest.
A very big one. A pro forma cash balance of $840.4 million. That's cited as among the strongest in their peer group. It gives them a substantial runway.
So that cash cushion is huge. It calms the nerves about near-term funding risks.
It does.
Okay, here's where it gets really interesting for me, though. A 1,000% gain means the market is pricing in, well, perfection. What is the bear case? Where does the risk lie?
The primary concern is, without a doubt, valuation and execution risk.
After a run like that, of course.
The stock is trading at a very high price-to-book ratio, around 6.95 times. And you have to remember, the revenue base is still small, and they're still posting net losses.
Even though those losses are narrowing.
They are narrowing, but a PB of almost 7 for a pre-profit company. Well, it's pricing in years of future success.
Any disappointment, any slip-up, and that valuation could contract very quickly.
Exactly. And the aggressive strategy is also the biggest risk.
It's a double-edged sword.
It is. Managing these huge, complex defense programs while also trying to integrate multiple recent acquisitions, that creates immense operational challenges.
So if the synergies don't materialize as planned, that path to profitability could get pushed out.
Absolutely. And you have to mention the volatility. The stock's beta is around 2.44.
Which means it's extremely sensitive to market swings. High risk, high reward is practically written all over it.
It is. That said, recent analyst upgrades suggest the consensus is that the opportunity outweighs the risk as long as management executes. Price targets have been raised as high as $13.
All driven by that line of sight to the 2026 revenue forecast.
It all comes back to that.
Okay, we need to keep an eye on the clock. So for you, the investor, what are the key catalysts we should look out for in the next few months? What could cause the next big move?
There are 3 short-term indicators. First, the Q4 2025 earnings release. That should be around February 2026.
And the market will expect another beat.
A strong one. Second, watch for news on that initial purchase order for the border protection system. That's anticipated for January 2026.
A concrete PO there would de-risk a huge chunk of that 2026 target.
A huge chunk. And third is the surge in institutional ownership.
Oh, interesting. So the big money is moving in.
It is. It's up over 100% in the last quarter. That signals heightened conviction among large funds, which could drive more momentum.
So this is a company that's clearly positioned to capitalize on these powerful structural tailwinds in autonomy and defense.
No question. The high volatility just reflects the market's bet that management can translate those moats and that cash into positive cash flow, which they are targeting for 2026.
If they hit that $110 million target and get to profitability, today's valuation will look a lot more reasonable.
It will. But if they falter, the downside could be severe.
So if you're looking at Ondas Holdings, you're really investing in a growth story where execution is absolutely everything. And 2026 is the year it all have to come together.
That's the story.
We appreciate you tuning in. Do you want more in-depth analyses like this? Don't forget to hit that subscribe button.